Okay, so I got it all hooked up. I should be good to go. All right, I'm ready whenever you are. Let's see.
All right, let's kick it off. All right, so hello everyone, and this is going to be recorded, by the way. So if anyone misses anything, you can go back and listen in, and we'll have the link live. But welcome to Credit Sesame's first Twitter Space in honor of Financial Literacy Month. Today, we're going to be hosting Markia Brown, aka the Money Plug, and talking all about credit health. Markia is a credit specialist and a credit score consultant. You can learn more about her on her website, themoneyplug.co, and go ahead and follow her at themoneyplug with 2 E's on Instagram, TikTok, and Twitter. So without further ado, Markia, welcome. Do you want to start off by talking a little bit more about who you are and how you got interested in credit?
Yeah, sure. So, in all honesty, I tell people all the time, I'm literally just a regular person who had horrible credit and just didn't have the money to hire other people to do something about it. So I had no choice but to kind of like buckle down, start learning the laws, start taking classes. I had to start like, I was taking workshops. I was reaching out to consumer lawyers, and I pretty much took all of the information that I had, got a couple certifications, and I started teaching other people. The foundation of what I do is making sure that everybody has the proper education to make an educated decision. A lot of people think that with credit repair, I'm supposed to tell you exactly what to do. But in all actuality, I'm supposed to give you all of your options and tell you what's going to happen when you choose whatever one, and then you make that decision on your own based off of what's best for you.
Love that. That's so true, too. So let's kick it off with the first question. This is super basic, but I think there's a lot of misconceptions about it and confusion. What is a credit score and how is it calculated?
So a credit score is pretty much a numerical representation of your credit worthiness. So you got to think about it like this. Back in the day, like way before technology, all they had to go off of was your reputation, and word of mouth, right? That's all they could use to really judge whether or not you were worthy of getting credit at like your local stores and things like that. And, as time went on, it became more and more unreliable, right? Because the thing about somebody's reputation is it's really easy to ruin it. So they started looking for what way can we use to accurately depict somebody's ability to pay their bills, but make it easier for lenders to really see through all the fluff, right? Because you could dress nice, you could put a pig in a suit, but it's still a pig at the end of the day. And so that's kind of how these systems got in place. Your credit report is like, it's like a receipt of all of the financial transactions that you've made in life. So anything they've ever had to like search your credit for, 9 times out of 10, if you pull up like a LexisNexis or something like that, you'll be able to see it there, even if it's not on your main credit report. So it's like a history in a sense of all of the financial experiences that you've had in life. And as time, goes on, they develop more and more ways to calculate the credit worthiness based on things like the economy, you know, what's going on financially. For example, now they just came out with the FICO 10 and the FICO 10T, which makes sense because post-pandemic, there's a lot more Americans now that have bad credit. And because of that, they had to establish a new credit scoring model to where those who had a couple mistakes, it's not going to hurt them too bad. But those who actually have a good credit profile won't necessarily bear the brunt of what the pandemic did to Americans financially.
Yeah, way to break it down. That was such an accurate depiction. Love that. So why is having a good credit score important?
And I'm so glad you asked this because I literally was having a back and forth on my TikTok comments this morning. So somebody commented on a video that I did saying, I'm never using credit cards. I've never had a credit card. I don't need credit. I use cash for everything. And I was like, why would you do that? And he was like, well, I never plan on getting a loan. A lot of people don't understand the actual consequences of not having credit. And it's a lot more than just your ability to buy a home or your ability to buy a car. When it comes to your credit score, employers check your credit score, and you could be denied for jobs based off of your credit score. If you're renting instead of buying, you can be denied an apartment or whatever it is you're applying for based off of your credit score. Car insurance, if you have a car and you're going to need car insurance, they run your credit when it's time for you to start shopping around for car insurance. So your credit affects a lot more than just your ability to walk into a bank and walk out with cash in your pocket. And a lot of people really don't understand that. And that's why I'm so passionate about putting this information out there and giving people who normally wouldn't have access to like resources and stuff that I've used over the years. And I'm so passionate about putting it out there so more and more people can be exposed to all of the circles of credit and not just, oh, I'm going to go buy a house or I'm going to go buy a car.
Yep, absolutely. That's so true. It impacts your life in so many more ways than you realize. Even if you want to rent an apartment, your credit score has a huge role in whether you get accepted for that apartment or not. So 100%. So what are a few reasons your credit score would have gone down? You get an email, the dreaded, your credit score has gone down 10 points. What are a couple of reasons that would have happened?
I hate those notifications. And I always tell people, and it's always, you never really realize how much your credit fluctuates until you start working on it. And then it's like every single point that you lose, it crushes your soul. But what a lot of people don't understand is that your credit is going to fluctuate, whether you have good credit or bad credit. It's just going to happen. And the reason why is because when you look at how a credit score is calculated, it's broken down into sections. They usually use a pie chart when they're talking about this. 35% of your credit score is your payment history. So looking at all of your accounts that actively report, how many of them have 100% on-time payment history? Then you go look at your credit utilization. That's 30% of your credit score. So out of all of the lines of credit and credit cards you have, if you add up all of your available credit limits, how much of your available credit are you actually using? Now, this section is the easiest to manipulate for points. It's literally as simple as paying down your credit card debt to maximize the points in this section. However, what a lot of people don't understand is that when this reports, when your credit utilization reporting, it needs to report as something. Everybody be like, oh, I pay all my cards down to zero. My credit utilization is 0%. You're actually handicapping yourself. It's not supposed to be at 0% because this is you demonstrating to future creditors like, hey, I'm going to use your products. Look at me. I'm using my stuff responsibly. But if it's consistently reporting at 0%, then you're really not maximizing the points you can get in this section. Now, I always get whenever I say that, and I can already see my TikTok comments being flooded now. Like, whenever I say that, people be like, well, I have an 800 credit score and I rarely use credit cards. I don't ever have any credit utilization reporting. And that's fine. That's perfectly fine. There's 1,000 ways to skin a cat. But what a lot of people don't realize is that the tips and stuff that I give out are not for people with 800 credit scores. This is for people with the 500s and the 600s who are just trying to get enough points to buy a house or, get a car. So this advice in particular about like using your credit cards and then paying them down before a certain time and things like that, those are for people who need these points in that section. So if you've never had an issue with this, I'm not telling you to go and change it. But if you have struggled with this particular section, definitely you want to evaluate how are you spending the money on your credit cards. Credit cards shouldn't be used for like emergencies. They should actually replace your everyday purchases. And then you use your debit card to kind of pay that off. Now, the next section is going to be 15%. That's your account history. So how long have you been building credit? A lot of people don't understand how important time is to building credit. They think that if they just get everything that's derogatory removed, that's going to instantly give them good credit. And that's really not how that works. I tell people all the time, you can repair and you can take everything derogatory off and literally still be left with a horrible credit score. It's all about how you build and how you rebuild if you have something that kind of sets you back a couple steps. And time is a very important aspect. A credit card isn't even really considered mature until it's about 4 to 5 years old. So you really have to give accounts time to age and really provide your profile with a lot of value before you can just be like, oh, I'm moving on to the next one. Another section of your credit score is 10% of your credit score is credit mix. Now, a lot of people get confused with this section because they think like, oh, I got 3 different credit cards. That's a good mix. I don't have just one. It's not about that. You need a good mix of credit cards and loans. There's 3 different types of credit overall. Revolving lines of credit, like installment loan. I mean, I'm sorry, like credit cards and charge cards. Those are the two types of revolving lines of credit normally, and then installment loans. And so, charge cards you typically see once you get the higher tier cards, like with Amex and stuff like that. But you should have a good balance of regular credit cards and regular loans. I typically use the example of the average person with a good credit score has at least three credit cards, one short term loan, and one long term loan. And when it comes to short term and long term, it's all about how long it takes you to pay that loan off. So a short term loan, you pay it off in 2 years or less. And a long term loan are things like your student loans or a mortgage or a car. And it tends to take you longer than 2 years to pay those items off. That is considered a well balanced credit profile because if your credit score is your ability to pay bills, right? They need to see your ability to pay all bills, not just one type of bill, if that makes sense. So you always want to make sure you have a good mix reporting at all times. And then the last section for your credit score, like that last 10%, this is usually reserved for inquiries, aka new lines of credit, right? So and the reason why those are often kind of like those words are interchangeable, like inquiries or new accounts, is because when you're getting an inquiry, you're likely trying to open up a new account. And if that's, when that's the case, you should not have more than 5 inquiries in a 12-month time period. Meaning you shouldn't be adding no more than 5 accounts in a 1 year time frame to your credit profile. I know a lot of people get into these credit repair groups and, you're following all these different people on TikTok and they have like the giant stacks of credit cards. And so you're like binge applying for cards, but you really don't need all of those credit cards to have a good credit score or to even be considered worthy of, credit. It's all about the how you manage your credit profile as a whole and not just one or two things. If you can manage all of those sections properly, and if you fully understand how all of these things work together, then you'll be able to manipulate your score in a way to get these things that you want, the cars, the houses. If you're trying to get a job and you just know that you can't have a certain amount of debt, for those of you with a security clearance, that's a really big thing. Your debt can get your security clearance snatched. So it's all about learning how all of these sections kind of work together so that you can understand why your credit score went down when it did. So let's say you got a credit card, and you just used up a little bit too much this month. You used more than what you normally did. So then when you pulled your score this month, you're like, whoa, my score dropped like an extra 10 points. It's because your credit utilization was higher than what you normally have reporting. So if you understand that, you'll know exactly where to look to plug the leak in your credit report. I always tell people your credit report is like a tire. When you're losing a lot of points, pour the water with the soap in it on your tire and look where the bubbles are. That's where the slow leak is. And that's where you can plug it in and fix it for yourself.
Love that. What a great analogy. I hope you guys are taking notes because these are gems. So this is a really popular question, and I think something that a lot of people want answered. How can you build credit when you currently have none? Don't have a credit score?
Oh, this is my favorite question. So it's all about income, right? When you're brand new to this, you got to think about what can I handle financially. So the first thing I always tell people is, do you have a job? If you don't have inconsistent income, which is often common when I'm talking to 18-year-old high schoolers or, young college students, they don't really have consistent income. So for them, that's when I usually mention like the credit Sesame Cash card. Whereas you're not ready for the responsibility of like a full-time credit card is what I call it, then you can take this, part-time credit card and use it and learn how credit really works. With the Sesame Cash card, you add money to your account and that's your credit limit. So you don't have to worry about going over your limit or spending money you don't have, which is a common worry for people who are new to credit. And you'll get into the habit actually of only spending what you have. Does that make sense? Like you only spend what you have to put into the account. And if you're doing that consistently with the Sesame Cash card, when you do get, consistent income, you're already in that habit. So you've already kind of curbed what a lot of people struggle with. Now, the Sesame Cash card doesn't really help with utilization, which is fine because that shouldn't be your primary focus when you're just starting. But again, Payment history is 35% of your credit score. So the sooner you can get accounts reporting on time payment history, the better. And with the Sesame Cash Card, the more you use it, the more it reports. So it's all about, it's putting the burden of responsibility on you to make sure that you're actually using these items. Because remember, a regular credit card, right? A full time credit card is only as valuable to you if you're using it. And the same goes for this. And like I said, I really love the Sesame Cash Card because it's a really good practice card in a sense. It teaches kids the responsibility of having a credit card while not having the ramifications that a regular account would usually have, for things like missed payments and stuff, because it's impossible to have one. If you don't have money on the account, then you can't spend anything. And so I usually recommend that for people who are new to the concept of credit, don't have a full understanding just yet, or they're not comfortable, especially like my high schoolers and my college students. Now, if you have consistent income, my first piece of advice is always start with your home bank. So if you have consistent income, which really means you have a job, usually means you got a bank account. Now, the bank that you normally bank with for your everyday purchases, they know you better than anybody else because they see all of your income and all of your expenses. So they'll be able to judge you based off of the relationship that they have with you and not just your credit score. Because when it comes to things like credit, yeah, your credit score opens a lot of doors, but the relationship that you establish with lenders is just as important. And I talk about that a lot on TikTok because, I always equate it to kids who don't. So I do not have a college degree. I joined the military fresh out of high school. That was always what I wanted to do. And so it's a lot harder for people who don't have college degrees to get the same positions that people with college degrees get once they graduate. The best way to get those jobs is by networking. So you have to think of the relationships that you have with your lenders as you networking. The better the relationship with your lender, the more doors that they will tend to open up for you because you have such a good relationship with them. This means consistently using their cards, their products, right? Show them that you're a valuable asset. When they have those, I know Capital One does it all the time, the referral codes. When they have those referral codes, pass those things out. Give them to your friends. Let them use it. Build that relationship with that lender. That is very important when it comes to establishing credit. Now, let's say you bank with a really big bank and you're looking for something more personable. Credit unions are always, always, always a good idea. But I definitely want to caveat that and say you do not have to commit fraud to join Navy Federal to get the benefits of a credit union. I see that a lot on Facebook. They have whole groups where people sell like their access numbers so that other people can get Navy Federal accounts. That's definitely fraud. You guys, please stop that. But, local credit unions offer some of the same benefits. I know Navy Federal has a higher platform than everybody else. They help the military. And so, you hear us talking about it a lot. But there are local credit unions. I'm from Baltimore, so I'm used to like MeQ and CQ and stuff like that. So look at local credit unions. Credit unions are, in my opinion, more people focused, right? People are the bottom line for most credit unions. And so, and a lot of those people are from the community as well. And actually last week I had the opportunity of presenting with the FDIC and the NCUA, or the National Credit Union Administration. And we did a presentation for credit unions and banks and people who provide youth employment opportunities. And I talked about how a lot of credit unions have so many valuable resources, but a lot of people don't even know that they're there because nobody wants to go into the bank anymore. So like, it's all about, if you're not sure, just go inside and ask a question. You can always call customer service and ask what opportunities do they have for you to learn. They have so many benefits to credit unions that a lot of people just aren't utilizing because they aren't aware. But yeah, I think, those are my top tips for people who are just getting into credit or who are rebuilding.
Those are great tips, and thanks for the call out on Sesame Cash. It's such a cool card. I'm not just saying that because I work at Credit. It's completely free. And it helps build your credit. There's no credit check or anything like that. And we just enabled a feature where if you don't even have a credit score, your credit score is zero. So like you said, someone who's just turned 18 or maybe newly immigrated to the country, or just have never had a credit score before, you can actually get the card and start building your credit, and you can establish a credit score within 90 days, which is so cool.
Yes.
And it's something that I'm not aware of anyone else doing this.
At all.
Such a cool feature. Yeah, for sure. So here's another common phrase that we hear a lot. when we're talking about credit scores and credit health. What does it mean to diversify your credit?
So this is when I'm talking about that credit mix, right? You want to make sure that you don't just have one type of credit. I mean, one type of credit. And I know a lot of people are like, oh, I don't want to go into debt and blah, blah, blah. But I'm going to be honest with you, right? America runs on credit. Nobody pays cash for every single thing. And and it's so crazy because I had this conversation. A very popular financial literacy content creator is Dave Ramsey. And in an interview, I'm not sure if it was for a podcast or what, because I watched the clip on YouTube, but he said that he had the money to go out and buy an apartment building, but he could not be a tenant in that same apartment building if he was to put in an application. And what that resonated with a lot of us who were having the discussion was, unless you have an unlimited supply of cash like Dave Ramsey, because what a lot of people forget is that he was rich before the money takeover or the money makeover. He was rich before that. So unless you have an unlimited amount of cash like him, you're going to have to rely on credit at some point. And then remember, when we discussed earlier in the space, we talked about how credit affects a lot more than just your ability to go get some money. It affects your ability to get a job, to get a student loan, to further your education. It affects so much when it comes to Americans. And so, it's like, oh man, like I think that's the biggest thing, is stressing how important it is to understand all of the things that credit affects so that you can really see the importance of it. And I think that's what I'm so passionate about, is spreading the importance of it. I'm sorry, I had something stuck in my throat. I'm so sorry.
You're good. You're good. Yeah, just like I said before, this is all just such important information, and hope you guys are taking notes, because all of this is just great information and super helpful if you're trying to improve your credit overall. So going back to credit cards, what is the best way for someone to pay their credit card bill?
Ooh, that's a really good question. Okay. So I've actually had a video that's been going in rotation a lot again on TikTok. And in the video, I talk about how credit cards were not designed for emergencies. But a lot of us were raised to believe that you should, either barely use your cards or only use them in case of an emergency. And the reason why I tell people that's a bad idea is because an emergency implies that you didn't have the cash to pay it, and you're not sure when you're going to have the cash to pay it, and you need to buy something right now. The reason why that's dangerous with a credit card is because for a lot of you, the interest rate on your credit card could be high. So if you put that emergency on your credit card, now you're stuck behind the eight ball trying to pay that down while interest is being added on top of that. And that's how a lot of people fall victim to credit card debt. The best way to use your credit card is to only use what you can afford to pay. I tell people all the time that your credit card should replace your debit card. So whenever you find yourself about to swipe your debit card, you should be swiping one of your credit cards that offers you some kind of perk for the purchase you're about to make. And then when you make that purchase with your credit card, you can instantly, as soon as you get back in your car or when you get home, there's an app for everything. You can literally schedule a same day payment that day. Now, there are some people who won't pay that day. They'll wait, let everything add up, during that billing cycle. And then at the end of the billing cycle is something known as your statement date. The statement date is the date that they're going to the credit bureaus and they're saying, hey, this is how much available credit they have, and this is how much they're using. And then they'll also send you, which is usually your bill, in the mail or make it available online for you to see. And your bill is going to show you all of the charges you made during this month, this monthly cycle. And then it's going to tell you what your payment due date is and how much you have to pay for your minimum monthly payment. Now, if you don't pay the purchases down every single time you make a purchase and you decide to wait, don't wait until your payment due date. Pay it before your statement date. It doesn't matter how much of your credit you actually use in that month. You want to make sure that before your statement date, that balance is paid down to less than 10%. I know a lot of you are tempted to pay them all the way off, and I definitely understand the concept, but you want to make sure that something is reporting to the credit bureaus. So a lot of people will pay all their credit cards down to 1%, and then after the statement date, like literally the day after, year, they'll go ahead and schedule the remaining payment to avoid paying interest on that credit card. Those two methods of payment are the easiest to manage your credit card debt, as well as the easiest. It's easy to set a habit for that. I'm one of those people who just go ahead and pay it after I use it, or I'll like use it for the week, pay it off at the end of the week, and then kind of be ready to start all over again Monday to maximize the points and stuff I'm getting for purchases I already planned on making. A lot of people be like, oh, but this is somebody else's money. It's not when you're using it properly. Because if I get $50 worth of gas from 7-Eleven and I use my debit card, I spent $50. And if I go to 7-Eleven and I get $50 worth of gas and I use my credit card, I still paid $50. It's just that I got cash back on that $50, as well as I had an extra step of scheduling a payment. But it's still the same amount of money.
Yep, cashback is key. That's a great tip. So this is a big question, but I'm sure you can break it down into some super actionable steps. How do you build your credit score up?
So the first step, I always tell people, pull your credit score. Even if you've never looked at it in life, and I'm not talking about on Credit Karma or anything like that, actually pull your full score. www.annualcreditreport.com. You are entitled to a free credit report from each agency once a year for the rest of your life. Pull a copy of your credit report just so that you can see what's already reporting. Oftentimes, you might have something already on there, or maybe you don't have anything at all. You won't know until you pull your score exactly where you stand. And that's key. You have to identify where you are, and then you have to identify where you want to be. My next step is I usually tell people, print a copy of your last bank statement for your main account, so that you can evaluate your spending habits. If you've never had a credit card before, you only use your debit cards, print your last monthly statement. And people always be looking at me crazy, like, you getting in my business. But the thing is, with credit cards and loans and things like that, when you're adding these accounts to your profile, why would you add accounts that don't offer you any benefit? And I always use the example, I'm 5'10", I'm 150 pounds soaking wet, so I'm very slim. I don't care how easy it is to get a Lane Bryant credit card. It makes no sense for me to go do so because I can't fit anything in the store. So I'll go get the credit card and never use it, meaning this credit card won't be valuable to my credit profile. I do, however, have a gang of kids that live in my home. They're all mine. I just talk like they're not. But, I have a lot of kids, so I have a Children's Place credit card. And now I put miles on my Children's Place credit card because that's what my spending habits support. So why not get points and perks for purchases I already planned on making? This makes the credit building process so much more easier when you're already in alignment with the purchases you're currently making. You're not having to go out of your way to use a credit card, or, oh, I forgot to buy something with this credit card today. You should not be adding accounts that you have no intentions on using or that don't already support your current spending habits, because especially when you're new to the process, like you're just getting started with credit building, you really haven't established any habits yet for me to even say if they're positive or negative. So this helps you establish positive habits early so that this is something that you can kind of continue on down the line instead of having to retrain yourself. Now, I mean, that's typically it. I feel like I answered that question.
Yeah, that is pretty much it. That's all great tips. So a couple last follow-up questions.
Mm-hmm.
One big question, and then kind of like a part B to the question.
Mm-hmm.
What does financial well-being mean to you?
Mm-hmm.
And what do you believe it means to be financially free?
This is a really good question. I actually had a conversation like this with my friends earlier on Clubhouse, because what financial wellness is to me is different for other people. I'm a very simple person. And I've been blessed that my husband, is simple as well. Like, we're not flashy. Like, for some people, financial wellness is being able to buy the big house, the fancy cars. But for me personally, I'm one of those people. I drive a Honda Odyssey. It's a newer model, but it's a Honda Odyssey, right? My husband has a Durango. Financial wellness for me is being able to spend my money on things that I like. For example, all of my followers know I have an extensive pop collection. I love the pop action figures. Like, those are my thing. Financial wellness is me going to the mall and just picking up a pop, and I didn't have to check my bank account before I went. Right. And I guess that's kind of me being financially free too, because I know my finances and I know my spending habits. A lot of people look at credit and things like that as a ball and chain. And I really feel like if you change the mentality surrounding how you handle your credit and things like that, that will really help you change your habits, which will help you get results. But unless you change the mindset that you have or how you view credit, you're not going to be able to really achieve that. And for me, I just love being able to go buy groceries and not having to check my bank account before. Or my kids, hey, can we go out to eat? Or, hey, can we go get some ice cream? And yeah, sure, hop in the car. We'll go run and do that. For me, that's financial freedom, and I consider myself financially well. I don't have a giant stack of credit cards. I have a handful. I can literally count on one hand how many I have. I don't have $1 million in my bank account, but I have enough to pay my bills and still live comfortably. That's financial wellness for me. But I think a big thing is that we all have to understand that looks differently for everyone. Everybody is going to have their own idea of what that is.
Yep, totally agree. The groceries part really hit home for me. That's something that I think about all the time. Just being able to go to the grocery store and not have to worry about, adding up every single cent of food that I'm buying for myself like I used to be able to. I think that is something that, shouldn't be taken for granted. And I think that definitely speaks to being financially free and financial wellness in general. So thank you for sharing that. Markia, any other thoughts or tips or other gems that you want to share with everyone on credit and credit health?
Yes. So first of all, everybody be like, where do you be getting all this information from? It's literally all free. All of the teachings, like the literature and stuff that I use when I'm doing all of my lives or making my videos and things like that, I get this all straight from the government. You can go to FTC, so Foxtrot Tango Charlie, FTC.gov. And they have so much information for consumers on what credit is, how to understand it, how do you use it, who are the credit bureaus, how do I contact them, how do I freeze my credit reports. I'm a victim of identity theft. Like everything that you guys ask me, the things that I'm saying to you in response literally come directly from the FTC. They provide free literature for anybody. You literally just have to go to the website, put your contact information in, order your stuff, and it comes 100% free. You don't even have to pay for shipping. I do that probably like once or twice a year. I'll order a bunch of the stuff and I usually like pass it out at school events that I do or pop-up shops that are in the area and things like that. But getting the information straight from the source is key. Practicing discernment, I think that's also a very big thing. Every tip that you see online will not apply to you. You have to learn how to kind of take what you need and leave what you don't. Otherwise, you'll be consumed in seeing what everyone else is doing and trying to mimic everyone else's success. And remember, your credit profile is as unique as you are. So what works for someone else may not work for you. Doesn't mean that that tip does not work. It's just not what's right for your credit profile. And always, always, always trust but verify. Even with my content, I'm really big on my followers being able to go back and look at what I'm talking about and not just hearing it from me. When you're following all these financial literacy coaches, you know, people, credit repair specialists, hell, if you follow me, you really can trust what I say, but always know where you can go back to verify the information that they're saying. Because for example, an article came out today and I actually have a TikTok scheduled for a little bit later that talks about the purchase of CPNs, and people using CPNs for things like cars and trying to buy homes and things. It's illegal. But a lot of people don't know that. They just see people advertise, people who look reputable, advertising them on social media. So you buy them. And then when, you get pulled up by the federal government, like one of the ladies in the article, all she said was, I didn't know. But ignorance of the law is not an excuse. You still will be held liable for whatever it was that you did. So it's very important that you trust the information that you see on social media or whatever, but verify it, just to be 1,000% sure. You want to make sure that you know every aspect that ties to your decision before making it. You don't want to make a decision and then unexpectedly have to deal with consequences that you didn't take into account. That's how people get into extensive credit card debt and things like that and ultimately end up filing bankruptcy. And last thing, speaking of bankruptcy, a lot of people think, if I file bankruptcy, I can just start over. So a lot of people don't change the habits that led them to the bad credit. They just keep messing their credit up and then keep trying to file for bankruptcy. A lot of people don't understand that filing for bankruptcy isn't necessarily a reset button. There are consequences to that action. Chapter 7 bankruptcy reports for 10 years. So for 10 years, you're wearing that scarlet letter B on your chest saying, hey, I mismanaged my money. Look at me. There are people who will deny you for as long as that bankruptcy is reporting on your credit. So, it's really, really important that we, push financial literacy, push true financial literacy that addresses things like bank deserts and lack of resources. We need to really push these kinds of creators and literature and programs in spaces, where people are underbanked, in inner city communities, communities of color, things like that, because they don't have access to a lot of the resources that other communities do have. It's really important that we push true financial literacy in everywhere, every social media platform, on the radio, in podcasts, on TV, because the decisions that people are making now will affect their future. And if they're supposed to be like children of the future, right? So if they're making all of these mistakes now, how are they going to fix them later if they don't know?
I mean, I don't think you can say it better than that. Totally agree. There is just so much free information online, including yourself. So everybody go follow the Money Plug with 2 E's for all of that free content and more of this amazing information that Marquia is giving us right now. Financial literacy is so important, which is why we wanted to have this discussion with Marquia, and we appreciate you so much for coming on and sharing your wisdom with us. And this has been a super enlightening conversation, and I hope everybody got some valuable info out of it.
Thank you so much for the opportunity. I had no idea this was you guys' first space. Congratulations.
Whatever, yay.
Look, I made history. But I love Credit Sesame.
Our first co-host, and this has been amazing. And looking forward to more discussions with you. And happy Financial Literacy Month.
Yes, happy Financial Literacy Month, and thank you again for the opportunity.
Of course. All right, everyone. Bye.
Bye, everybody. Thank you so much for everybody who tuned in. If you don't follow me on Twitter, my name on Twitter is at THEE Money Plug. I literally just went live with, and I can even show you, it has a recording that you can actually play and everything. I was just live on Twitter Spaces with the company Credit Sesame and talking about credit history for Financial Literacy Month. I love Credit Sesame. I love everything that they're trying to accomplish. They've been making huge strides in providing resources and tools to those who are underbanked and often overlooked. And so I'm very thankful for the opportunity. So if any of you who work at Credit Sesame is watching this, thank you so much. This was definitely an honor to help you guys host your very first Twitter space. And I'm looking forward to so many more. I'm live right now on YouTube, Facebook, and TikTok. So now that the live is over on Twitter, you guys can start dropping questions in the comments, and then I'll take I'll give you guys like another half hour, and I can start answering all your questions. If you guys have credit questions, I know I was live literally a couple hours ago, but I'll go ahead and answer a couple of your questions now. My baby is going to her dream college this fall, and it is $40K a year. She has $20K in scholarships, and I think she may be forced to take out loans for the rest because I can't help her because of my credit. I don't want her saddled with debt, but I now understand this will probably be her longest standing debt. How do I set her up for success? When it comes to student loans, a lot of people have a very negative outlook, right? Like, oh my God, I have all of these student loans. Now my credit is shot. But that's actually not true. For most people, your student loans is the backbone or the foundation of your credit profile. It's often, what is keeping you, like holding you together or even establishing a score for most people. Most people, the only account they have are their student loans. So I get the concept of, you got a lot of money to pay back in student loans. However, actually having a student loan doesn't necessarily hurt. What I will say is you might want to start talking to your daughter about, establishing credit now and establishing good credit now. The higher her score is, so let's say she goes get a loan today, a student loan, and her credit score is like a 500. Now, let's say by the time she graduates, right, because all of your payments are deferred until you graduate, her credit score is at like a 825, right, because all she has is nothing but positive history. She has 4 years worth of credit card on-time payments, maybe a loan or something like that because she got a car, whatever. Now, she can always try to restructure her loans at that point. I mean, I'm not a professional, so you would have to, it all depends on the kind of loans you got, whether they're federal or, the school loans, right? Or private loans is what they're normally referred to as. But, when you let's say even if you get a car and your score is low when you first get the car, when you improve your credit score, you can always go back and try to renegotiate the terms of that contract, because now you have demonstrated that not only are you reliable with this debt, but you're reliable with a host of other debts. And a lot of times people get things like lower interest rates. People tend to consolidate their student loans at that point, like upon graduation. They tend to consolidate their student loans for better interest rates. And there are often a lot of programs even that can help her with student loan repayment. I am not a recruiter. Before I say this, I'm not a recruiter, and everybody's experience is different. But I have a lot of friends who actually joined the military because the military at the time was advertising their student loan repayment program. So, there are a lot of programs, even employers who will help pay back student loans. So it's not that you're not setting her up for success. Having the student loan isn't necessarily setting her up for failure. So don't look at it like that. But just making sure that she has access to true financial literacy, right? So, representation matters. So finding other, African Americans who have similar experiences to you all and your upbringing, and then, following them, look at what they're doing, what have they done, and take the pieces that relate to you and leave what doesn't. Just make sure she has access to the information, because a lot of times when we hear from our moms, we're not going to listen. So just take that, give her access to it so she at least has it in kind of like her mental Rolodex, and then that's setting her up for success already. I need you as my financial coach. All you gotta do is follow me. I swear I give all the advice out for free. Hey, we had the same concern. See, you never know what questions you may have until somebody else asks them. So make sure y'all are liking the video so that we can get more people, or share the video even. Let's see. What other questions you guys have? Let's see. Okay, that's all on Facebook. All right. Well, if y'all don't got questions, y'all know I'm gonna get off of here. We started a life insurance plan that will allow us to help her pay the loans back. That is so good. I don't know anything about life insurance. I'm gonna be 1,000% honest with y'all. My life insurance comes from the government, and it always has since I was 18. And so, but what I will say is I follow someone, her name is Miss Life Insurance, literally just Miss Life Insurance. Her name is Brittany. She's amazing. She does a really good job at breaking down what life insurance is, which one works best for you, whole versus the other one. I forgot what the other one is called, but she does a really good job with explaining insurance. So if you've always heard people talking about that and you're really not sure how it works, please follow her on Instagram. I'm not sure if she's on TikTok, but I know she's on Instagram, and her name is Miss Life Insurance. Tell her the Money Plug sent you. I love her. Can you discuss the validity of these credit card hacks? A lot of times there is no hack. I'm gonna be 1,000% honest with you. A lot of people think they're tricking a system or whatever the case may be. And because other people have had success, they think this is a legit hack. And it's truly not. It's truly not. It's truly not. Like somebody be like, oh, if you apply for Victoria's Secret late at night, you'll get approved. Like, what? I seen something about TransUnion and some lawsuit. Yeah, I actually posted it on my Instagram, and I've talked about it a little bit on live. So you guys know I get the CFPB bulletins in my email, and you can sign up as well. If you go to cfpb.gov, you can sign up for the emails and get the same exact bulletins I get. They sent one out that talked about how the Consumer Financial Protection Bureau is one of the entities that have been charged with enforcing the FCRA. And so they charged TransUnion with violating a couple different laws, including a new one that they enacted, I want to say around like 2017. I could be a couple years off, and pretty much what they were doing were they were tricking consumers into signing up for subscriptions with them and then making it hard to cancel your subscription. And this isn't the first time TransUnion has done it. They did it recently and was sued for like $13 million, which ended up obviously being a class action, and like people got money for it and things like that. So, definitely keep an eye out on your email, right? But, this is the first time they've done it. It probably won't be the last time they do it. You got to understand the thing with the credit bureaus is that these are companies at the end of the day. Their bottom line will always be to make money. And so that's how these things happen. Dark web on my FICO, is there something you should or can do when you are alerted? Yes. Let me tell you. So, I told you all how in December I had got a dark web monitoring alert for all of my card information. I didn't, and my personal information. I didn't think nothing of it because I'm like, what, whatever. Like like I knew what it was, but I was so consumed with Christmas and everything else, I just did not get around to it. I had put it on the back burner and completely forgot about it. Well, later on, I found out that all of my cards got hit. And it was crazy because it wasn't just my personal cards either. My business cards were affected. I was a victim of fraud. I had no idea how it happened, but those alerts will be on point. When you get those alerts, cancel all of your credit cards, every single one, and order new ones. Not close your account, but just request new cards. If you have a PayPal, disconnect all of the cards from your PayPal and change your PayPal password. If you have if you use things like Afterpay or Klarna or whatever, anything that has, or like Amazon, anything that has your credit card information in it, you need to reset those passwords. You need to just go in and binge clean password history, card numbers, all of that if you get those notifications, because if you don't, you're going to end up like me. Somebody was trying to spend $700 at Michael's. So I've been calling the creditors and they don't know what a pay for delete letter is because they may not call it that in their system. And you also have to think about who have you been saying that to. So pay to delete letters only work for debt collectors. So it has to have been in collections. It does not work for charge-offs. And like I said, it might not be referred to that. As people, we often make nicknames for things. For example, if you're in my Facebook group, I have something known as the "This is not what I asked for" letter. It's not the name of the letter. It's just like a moniker we all came up with to remember it. But as long as you explain what you're looking for, in the letter, you don't have to say, "Can I get a pay to delete letter?" Because that sounds like you've been talking to a credit repair specialist and they don't want to hear that. You have to be able to explain what the pay to delete letter is. And this is why I always tell people who are doing DIY, don't just regurgitate the information that you hear, actually understand it so that you can explain it. So you should be able to go to a debt collector and be like, "Hi, I'm calling because I received a notification of a debt that you're saying I owe, and I'm not saying that this is a valid debt. However, I would like to have this situation handled amicably and quickly. So I'm willing to offer you X amount of dollars to settle this debt in exchange for you not to report to the credit bureaus. If you agree, please send back your agreement in a written form and let me know where I can issue payment." Literally as simple as that. And you want to get the agreement in writing because anything in writing signed by a representative of the company on the company's letterhead is considered a legally binding agreement. So if they agree to remove the account from your credit report after you pay in writing, and then they don't, that's a violation of that agreement, which violates your rights under the FCRA. What if they offer a paid off letter? That's not the same. A paid off letter is just going to update the status of that account to paid. It's not going to remove the account from collections. And this is why I say this only works for collections. This doesn't work for charge-offs, because with a collection, it doesn't matter how much you owe. It doesn't matter who you owe. What matters is that you have an account in collections. That's what lost you the point, not the amounts, not how many collections you had. It's the fact that you even had collections in the first place. And so the only way to get those points back is to have that account removed from collections. And one of the only ways to guarantee that that item won't repopulate once you remove it is by submitting a pay to delete and getting them to agree to it. I sent off the "not what I asked for" too because they kept sending me just billing statements. I received a response back saying they already sent me the requested information. What should I do next? I didn't know if I should negotiate a pay to delete at this point. It depends on the kind of debt it is. If it's a charge off, a pay to delete won't work. But you can also keep pushing the issue with the fact that they did not validate that debt. So if you sent the very extensive, either way, if you sent the long debt validation letter or the "that's not what I asked for" letter, for those of you who sent either one, when you send those letters, it is a very detailed letter that explains exactly what you're looking for from this company. And so if you sent it off and the company did not respond, then you take that letter that they just sent you and you say, "Hello, yes, I received a response to my request, but it was not the information that I requested. Attached is a copy of the response that you sent, and attached is a copy of the initial letter where I requested very specific information. I have also highlighted the information so that you can see exactly what I'm asking for and accommodate my request. Please make sure Please validate the information requested or remove the account from reporting from my credit report. Failure to do so will result in me filing a complaint with the Consumer Financial Protection Bureau. Thank you. Literally as simple as that. Because just because they respond does not mean that they no longer have to respond. You did not respond to my request for particular information regarding the validity of this debt. And since the validity of this debt is still in question, they are still not allowed to report or collect on it until the investigation is complete. They didn't complete an investigation. They didn't do anything. They sent you a bill. That's not an investigation. All of my accounts are charge-offs. I need to get those deleted to buy a house. So no, a pay to delete is not going to work, and that's likely why they don't know what you're talking about. Pay to deletes only work with collections. Charge-offs are harder to remove than collections because the reason we get to collections off is oftentimes due to like clerical errors. Things like they didn't have the necessary paperwork that they needed to validate a debt, or they're missing, documents because it exchanged hands. And so they only have what they have access to. And if they don't have access to all of the information, they'll be like, oh, my bad, I can't collect on it. I'm going to go ahead and just remove myself from your credit report. If it's a charge off, you signed that contract with that company. So it's likely that they still have that information on file, especially if you haven't paid it yet. Unfortunately, if you're looking to buy a home, your best option is going to be to start paying these off one by one and then maybe trying to identify some kind of inaccuracy in the way that these items are reporting to and capitalize on those to get it removed. But again, it's a lot harder than removing collections, and you can't just get it taken off because you want. What other questions you guys got for me? Oh, you're so welcome, Nikki. Let's see. I just want to make sure I'm answering everybody's questions. All right, what other questions you guys got for me? Is that it? Going once, going twice. Y'all know how I get. Y'all start asking me questions. I get the hell off because that's rare. I got y'all 5 more minutes. Y'all ain't got no more credit questions for me. Can you explain FICO 10T? So fun fact about FICO 10T. So FICO 10 and FICO 10T, which are two separate scores, please don't be confused. This is the first time that FICO has ever come out with two base scores at the same time. It really, honestly, if you want me to be completely honest with y'all, it's literally having no effect on the industry right now because no lenders have come out and said, I'm using FICO 10 to determine whether or not people can get an account with me. Nobody has come out and said that yet. So this score is literally, it means nothing just yet. However, they have been very transparent in like the changes between FICO 10 and FICO 10T as opposed to the other FICO scores. For example, FICO 10T, you got to think about, so FICO 10 is like when you pull up, like think about your credit history playing on your phone, right? And it's playing across your screen and you screenshot it. That's what a credit report is. Your credit report is like a screenshot of the current state of your personal finances, right? Whereas with FICO 10T, it's more of a TikTok. Instead of just a screenshot, it's like a 10 to 15 second video, right? Of the history over a certain period of time, so 2 years. And it's going to look at the trend. So what is the trend? They have been transparent in saying that late payments have a harsher effect. But something that I found very unique, and I heard this straight from the source, right? So something that I found very unique with FICO 10 and FICO 10T is that they use the example of, let's say you get a loan to cover your personal credit card debt, right? And you get a personal loan to pay down that credit card debt. And you're making your payments and everything on the loan, but you are also at the same time racking that credit card debt back up. They will penalize you for that because obviously the whole point of the loan was to pay off the credit cards and keep them like low, right? Not to rack that debt back up. So there are some like small differences like that that could actually make a huge difference with your score. I always say go straight to the source. Experian has released some resources that you can go to look at, and they are a company who generates a credit score, so it'd be behoove you, right, knock on wood, like I'm stomping, Go look at Experian and see exactly what they're saying about FICO and FICO 10T. Look at Equifax. Look at TransUnion. You want to get the information directly from the source. These are the people who are calculating your credit score, so it would make sense to go to them. If I pay those charge offs, will it make my credit worse? It's not going to make your credit worse, but it's also not going to improve your score. But it will improve your credit profile health. This is why financial literacy is very important, because you have to learn the difference between your credit score and your credit profile. The things on your credit profile can influence your score, but there are often times that things that can help your credit profile won't move your score at all. So those unpaid debts are part of the reason why you probably don't qualify for a home, because your credit profile is unhealthy. You have open debt that you just don't plan on paying. And unfortunately, just because you want something removed does not mean it's going to come off. So your best option is to pay the charge off before they become collections, and then you lose even more points for this debt. So you always tell people that when you have a charge off, pay it as a charge off. Even if you settle for less than owed, as long as the accounts are considered $0 balance, like that's the important part. That's the goal. Now, again, like I said, these items aren't going to be removed. When you make payments, that resets the reporting time for a debt. So now it won't come off for another 7 years. And I get that that's not always, attractive to a lot of you, right? But um unfortunately, that's the best option moving forward, because when you don't pay charge offs, even if you get them removed, when you don't pay charge offs, they can become collections, which is going to cost you even more points. And then if it gets sold to a company that doesn't do pay to deletes, congratulations, you're going to be stuck with that collection on your credit report for the next 7 years. And that's even more, that hurts your credit even more than a charge off. What is considered a high limit credit card? How do you determine how the bank sees you for this type of card? You have to position yourself financially in a way that you are worthy of the credit that you're applying for. So this encompasses your score and your card and your spending habits. I call it the holy trinity. You have to make sure all three of those things are in alignment. This means you have to have a good credit score, you have to have a healthy credit profile, and you have to have good healthy spending habits. I'm not saying go out and don't spend no money. What I'm saying is spend money responsibly, and then make sure you're using your credit cards. Make sure you got loans that actually benefit you. Things like that. So I can't that like there's no one size fits all when it comes to credit building, because again, your credit profile is as unique to you as you are, because this is kind of like your history associated with money. So I can't really give you like a step by step, but that is kind of like the general overall view. I heard don't pay collections or charge offs. Okay, don't pay it then. But if you don't pay that charge off, it's going to become a collection and cost you even more points. And even if you keep disputing the collection and it keeps getting removed, it's going to keep repopulating until the end of the reporting time. After 7 years, these items don't report anymore. However, depending on how you handled the situation and what state you lived in when accrued this debt, it is possible in its entirety that they can take you to court for each and every charge off that you have, and they can get things known as judgments, which will lead to things like garnishing your wages, taking your taxes, et cetera, et cetera. Do IRS issues affect your credit score? I do not speak on IRS issues because I am not a tax professional. So as soon as y'all say IRS, I don't even listen to the rest of the question. I'm gonna be 1,000% honest with you, because that is a legal question for like a tax preparer or a tax lawyer or somebody like that. Will that trend negatively affect me? It depends on what your current spending habits are. Um, Before it came out or before it went live, right? They were saying that, oh, your score won't move more than 20 points in either direction. But I've seen some people say that their score is like 100 points less than what their FICO 8 or FICO 9 is. So it really just depends on kind of where you're sitting already. How far off is FICO 8 from what? How far off is it from what? So what if I run a card up throughout the month and then pay it off at the end of the month? That's fine. As long as when that credit card reports to the credit bureaus, as long as that credit utilization is as low as possible without touching 0%, you won. I have a charge off that's 6 years, 9 months old. Is it beneficial to try and get it removed? Removing it won't absolve you of the debt. So if your goal is to remove it so that you don't have to pay it, no, it's not going to happen, because technically you'll still owe that money. And again, this is a preference question. So like, what do you want to do? I can tell you what'll happen. So if you dispute it and they validate that debt, then you have now re-aged that account. So yeah, it'll still fall off at 7 years. However, you've reset the statute of limitations depending on what state you live in. And if you've reset the statute of limitations, this means this company now has an extended period of time to sue you. And if this is a suable debt, like right, if this is a high dollar debt, then yeah, you going to court, my guy. And I always tell people, everybody be like, oh, what is a high dollar debt? I always tell people, you gotta look at it like this. If you owe somebody an amount of money that you would normally fight somebody for if they owed it to you and was playing with you, that's considered a high dollar debt, and you should treat it as such. That's how I make that determination. What other questions y'all got for me? I want them to stop reporting. Just because you wanted to stop reporting, that's not grounds for removal. If you want something taken off, you got to be able to have like a legitimate reason. So look at how it's reporting to the credit bureau. See if you can find like an inaccuracy in the way that it's reporting. Like that's what you're looking for when you're disputing. It's not enough to just want it off so you submit a dispute. That's not good enough. What other questions you guys got for me? Oh, it's 9 o'clock. Oh shoot, it's 9 o'clock. That was quick. Time went by mad fast. Let me be sure. Sorry, I'm checking all the other notifications to be sure I got everybody. What what are your thoughts on debt relief programs? So I actually did a recent video on this too. Um, because I don't like them. I don't like them. Whenever I have a client personally who's like, oh, I'm considering debt consolidation or a debt relief program, I'm like, to each his own. But I do break down the pros. Like I always tell them to sit down and evaluate the pros and the cons, because one of the cons is all of the items that they're like paying off for you or whatever the case may be, they're not getting them removed. So even if you pay them all off, you're still technically stuck with the derogatory marks and it's not doing anything for your score. Another thing that you also want to consider is that if you had that money, you would have paid them people off, right? I would hope you would have, right? Following that same logic, why are you paying more to pay off the same amount of debt? Because when you do these debt relief programs or these debt consolidation programs, the interest rates on them are ridiculous. That's why a lot of people try to get like personal loans and then use those personal loans to pay those off, like pay off credit cards, because these debt consolidation loans are ridiculous with the interest because they're predatory in nature. They prey on the fact that people don't know how to pay off their credit card debt, so we'll do it for you, but at a high cost. And you're going to pay whatever you need to pay because you're so overwhelmed when it comes to your finances that you just don't want to deal with it anymore. You want somebody else to take care of it. And so you're willing to pay that money, not understanding that you're paying almost triple what you owed. And if you had that money, again, you would have paid them people off yourself. So why are you paying more money to pay off your debt when you could just literally snowball it? One by one, pick an account and start working it out like that. So I'm against debt relief programs, but again, I always let, my people know, listen, at the end of the day, it's what you want to do. My job is not to tell you what to do. My job is to give you all of the information that you need to make an educated decision. That's my job. I don't comment on anything regarding the IRS because I am not a tax professional. This fucking sweater is itchy. I'm not a tax professional, and so I don't want to give incorrect information when it comes to the IRS. Thanks for answering. It's much appreciated. Oh, you're so welcome. You're welcome, James. Any more questions y'all got for the sister before I hop off of here? I know I've been live a couple times today, and I'm probably getting on y'all nerves. But then again, thank you guys so much for kind of hanging out with me today. Thank you so much to Credit Sesame for inviting me with them to do their very first Twitter space. I'm so excited, especially because they kind of inspired me to start using Twitter spaces. So I'm super excited about that. And just Man, like so much has been happening for me lately, and I definitely got you all to thank for that. So I definitely want to give my thanks to all of my followers and stuff when you guys watch this. Because if you weren't here the whole time, if you missed a portion of it, you can always go on Facebook or on my YouTube channel, WWTMPD, What Would the Money Plug Do? And watch this live. But I really gotta thank you guys, because if it wasn't for you all sharing my content, liking my content, asking the questions that you're asking, I would never have the platform that I have now. Like I literally just sat with Credit Sesame, like a huge multi-billion-dollar corporation, right? And talked about credit on Twitter. Like that's wild. Little old me, like it's still kind of like unreal sometimes. And then next week I had the event at Capitol Hill, and I get to meet Congresswoman Maxine Waters. Like y'all don't understand how lit that is to me. Like even if I get kicked out after that, like my life would be complete. Like y'all just don't understand. Like I'm just so thankful to you all for giving me the opportunity to not only do something that I'm super passionate about, which is educating you all, but also being able to change people's lives. I get emails and letters. Somebody sent me a card in the mail once. Just people telling me how I've changed their life. People who come from countries who don't have credit, so they don't really understand how it works. They watch my stuff and they get it now. Like it's so I'm so humbled and just so thankful for you guys. Hold on. I see some more. Have you heard or discovered using Equifax to do verifications, like income verifications, or just like to check to see your credit worthiness on whether or not you're going to get an account? Can you have the Freedom Unlimited and the Sapphire Preferred and still combine the points? I haven't known anybody to do that, but that's not to say that it's impossible. I'm just being honest with you. So I have never personally seen that. Um, so I'm not saying it's not impossible at all. That's a really good question, Dion. Yo, I should call customer service and I always tell people, if you got a question, it never hurts to, like, you never lose points for asking questions. Call Chase. Dion, if you talk to somebody at Chase, let me know what they say, please, because I've never heard of that. That's a good ass question. Let's see. All right. Any more? I hear a lot about the Chase trifecta. Man. So I caught on to the Chase train late, right? But something that I definitely want to warn you guys about Chase is the 524 rule. I didn't realize a lot of people don't know this, but with Chase specifically, um, for more if you open more than 5 credit cards in a 2-year time period and then think you about to get a Chase card, you can hang it up. And that's just a Chase specific rule. I don't know if any other companies do this. I haven't necessarily seen it. But Chase specifically, yeah, I learned about that. That's why I'm in it now. I know about that rule. Yep. A lot of people didn't know that, and I didn't realize that until recently. What's a FICO score that's high enough? It might as well be an 850, 780, 760, 800. So everybody always be like, what's the top credit score, right? The highest, I've never seen anybody with the highest you can get. But I always tell people, just aim for a healthy credit profile. If you aim for a healthy credit profile, then your score will reflect that. I always say, don't set a goal with your score, set a goal with your profile. So say, hey, I want to have 3 credit cards, 2 loans reporting at all times, and your score will reflect the healthy decisions that you're making. But when you hyper focus on your score, a lot of people lose focus on how to act, like the proper way to build, right? And they get focused on, oh, such and such got this card with a $10,000 limit, I want it, not knowing that it's not going to provide a value. You're not going to use it, you don't need it, right? They just want it because somebody else has it and it got them 100 points, and so now you like, look, I want to go get that too. Your goals should also be in alignment with the things that you're trying to accumulate. So if you want a house, if a house is your ultimate goal, then all right, well, I want an FHA loan, and I've been thinking about going with this bank right here because they got good rates and I like their commercials. I don't know why y'all be making decisions like that. I don't know. So you'll say, okay, well, I did my research and they commonly work with people who are in this credit score range. So this range isn't necessarily my goal, but I want to improve my credit profile health so that my score gets to that range, right? Like that. How would you negotiate a pay to delete and what, like 10%? So I'm going to be honest. When it comes to pay to delete, you're asking for a favor, so they'll tend to ask for higher, like usually pay in full, or higher than that. But whenever I start negotiations for either a pay to delete or a settlement, it doesn't matter what it is or how much it is. I always start at 20% of what the original cost of the debt is. Always start at 20%. And then you have to remind yourself that this is a negotiation. So just because they told you no this time doesn't mean that you can't change the parameters and then resubmit it. Is a utility bill from a debt collector a form of validation? No. A bill is not a proper debt validation. A proper debt validation not only explains the amount that is owed, but it demonstrates the relationship that you had with the original creditor. So if you had that utility bill with, I'm from Baltimore, so I can only use Baltimore examples. But if you had that utility bill with BGE, Baltimore Gas and Electric, right? And you just didn't pay it and it went to collections, and you did a debt validation with the collection company and they cannot give you a copy of your original application for service or anything that you signed with BGE saying that you would be on the hook for this service, then they have not done a proper debt validation because they have not proven that you are the party that owns that debt. So I answered your question. Any more questions before I hop off? You are so welcome. Well, I'm out of here, guys. I've been live on and off a couple times. I done went to court today. I had a lot going on today. I'm exhausted. Look at my eyes, y'all. Look at my eyes. Not to mention, I didn't even get home till like 2 o'clock this morning. So I'm out of here. I'm gonna take a little break and then probably jump right back on my work. So if you guys have any questions, please don't hesitate to ask. You can leave comments under whatever TikTok video floats your boat, and I try to go back and answer it. You can send me Q&As. My email address is also in my TikTok bio, and so you could also email me questions. If you're on Facebook, y'all know all y'all got to do is post the question and I'll answer it. How do I find out the credit score range that a bank will accept? You have to do research, right? It's going to require you to maybe join a couple Facebook groups, do research on the bank's website, contact customer service. Like they will tell you. All you got to do is just ask the question. All you got to do is ask the question. And you don't lose points for asking questions. You lose points once you start. And if you asking questions after you filled out the application, you can't. You fucked up, AA Ron. But thank you guys again so much. Thank you, Credit Sesame, for the opportunity to go live with you all. Again, I'm so humbled and so thankful for all the support that I've gotten over the last year and some change. You guys have made all my little dreams come true, right? So thank you guys so much. I will be back on Friday. That's when I'll be back live, but I'll go back to posting my content and all that stuff every day tomorrow. But thank you again. Thank you so much. Oh, hey, Krishana. Thank you, girl. Shout out to V-Slay. If you a girl or a woman presenting and you need feminine care products, V-Slay is definitely the place to go. It's woman owned, black woman owned, veteran owned, disabled veteran owned. Like I'm telling you, I love her down. And she's so responsive to any issues and stuff that you may have. So please support small businesses. I'm out of here. Y'all know what I always say. Live every day like it's your last, but pay your bills and wear condoms just in case it's not. Yes, plant-based. That's a big thing too. Her products are plant-based. So I will see all of you on Friday. If you guys have any questions, don't hesitate to reach out. You never know. I might go live tomorrow if I get enough questions. So I'll see you all later. Bye.